Let me tell you something that can completely change the way you see money. In investing, there is a turning point, a moment when everything starts to accelerate. This moment has a name and a number, the first $100,000. In the beginning, saving money is difficult. You make a huge effort, save here, cut there, and in the end, it seems like you're not getting anywhere. But the truth is that this is part of the process. Because up to 100,000, the growth of your assets depends more on how much you earn, how much you save, then on the investments themselves. Now, here comes the twist. When you arrive at the 100,000 invested, the game changes. You stop pushing the car with your arm, and the engine starts running by itself. Want a simple example? Imagine you invest $100 and get a 10% return per year. At the end of the year, you've earned $10. That's cool, but let's be honest, $10 won't change your life. Now, what if you had 100K invested with the same 10% return? Then you make $10,000, same effort, same strategy, 1,000 times greater result. This is what investors call capital working for you. Money starts working for you. And that's why Charlie Munger, Warren Buffett's right-hand man, said, "The first 100K is a struggle, but you have to get there at any cost." And he's right. Why, after 100,000, your wealth starts to grow in a snowball effect. And the sooner you get there, the more time your money has to multiply. This is the point that separates those who are always chasing bills from those who are starting to walk towards financial freedom. So here's the message. Reaching 100,000 is not the end. It's just the beginning. But it's the beginning that changes everything. Have you ever tried to make a snowball? At first, it's just a handful of snow that you hold with both hands. But then you start rolling that ball on the floor, and it keeps growing. It gets heavier, faster, and suddenly you look and think, wow, how did it get so big? Saving money is exactly the same. In the first few years, you save a little bit here and a little bit there. It seems slow. It seems like you'll never get to 100,000. But what most people don't realize is that every dollar saved is like more snow in your snowball. And it gains strength, it gains speed. Let me give you a real example. If you can save $10,000 a year and invest it at an average return of 7% per year, which is quite realistic for those who invest in ETFs, stocks, or well-diversified funds, you will take about 7 years and 10 months to collect the first 100,000. Now look at the magic. To go from 100,000 to 200,000, it doesn't take 7 more years. He takes only 5 years. Then to reach 300,000, less than 4 years. At each new stage, it gets faster, not because you're working more, but because now your money is running for you. This is what Americans call compound effect, the famous effect of compound interest. And those who understand this early are light years ahead. That's why those who take too long to get started end up giving up, because it seems like it's not worth it. But let me tell you, it is precisely at this beginning that you need to insist. Every dollar you save now is like pushing the ball down a hill, and eventually it rolls by itself. And when that happens, you'll look back and think, it's a good thing I didn't stop. Do you like tips that make your money grow? Then subscribe here so you don't miss any videos. So let's recap quickly. At first, saving money seems like an impossible mission. You save, and the account barely grows. But if you insist, you get to 100,000, and then everything changes. Your snowball starts rolling down the hill, and now it will pick up speed. But you know what few people realize? After the first 100,000, each new financial goal arrives faster than the last. It's almost as if time passes more slowly, but your money flows faster. Want to see how this works? Imagine that you continue to save the same 10,000 per year and invest with that average return of 7% per year. Just look at this sequence. To gather the first 100,000, it takes almost 8 years. To go from 100K to 200,000, it only takes 5 years. From 200K to 300,000, 3 years and 9 months. For 400,000, only 3 years. And to beat the 500,000, now it's only 2.5 years. That is, the last 100,000 arrived 3 times faster than the first ones. And the craziest thing is that you did exactly the same thing, saved 10,000 a year and let time and interest work. This is where many people start to wonder, where has this money been all this time? But the answer is simple. He was growing, slowly, until he gained enough strength to run on his own. And that's what differentiates those who play in the short term from those who build real wealth. So if you are still in the early years of your journey, don't be discouraged. It's frustrating. Sometimes, yes. But know that every penny you save now is shortening the time until your financial freedom. You are planting a tree, and when it starts to bear fruit, it will be every year, without you having to plant everything again. Want to speed up your journey to your first $100,000? Sign up and activate the bell to be the first to receive everything. Now hold this. Do you know how long it takes, with the same rate of contributions and investments, to save money? $1 million. With the same $10,000 a year and a 7% return per year, you can get there in just over 15 years. But there is a detail here that changes everything. Do you know how much of that time you're going to spend just to collect the first 100,000? More than 7 years, i.e., almost half of the total time, even the first million, is spent just to accumulate the first piece. This means that from the second 100,000 to the entire million takes less time than that first stretch. Let me repeat this to make it stick. The first 100K are the slowest, the hardest done, and the most important. That's why Charlie Munger, Warren Buffett's billionaire partner, said the first $100,000 is a betch, but you got to do it, no excuses. Because he knew what he was talking about. Everything gets easier after that. The truth is that in the beginning, the scales weigh against you. You have to save, study, control yourself, work more. And the return? It's almost invisible. But that is the price of freedom. If you get through this first phase, if you hang in there, if you're smart, disciplined, strategic, you will see that time starts to play in your favor. After the first 100K, your money starts paying you back, and each new 100K appears faster, until one day, you wake up and realize that your wealth has grown without you even noticing. So keep this with you. You don't have to be a genius. You just have to get to 100,000, because after that, the game changes. Now that you understand that the beginning is the hardest part, let me show you what most delays people on this journey. It's not the lack of intelligence, it's not even the low salary and the lifestyle. The truth is that we live in the age of instant gratification. Everything is now. Want food? One click. Want to buy something? Swipe your card. Want some distraction? Your cell phone is already in your hand, and the money, it slips away without us noticing. You may have seen someone like this. The person complains about the cost of living, says they can't save anything. But he's out partying every weekend with a drink in his hand and an iPhone 17 in installments in his pocket. It's as if he were always saying, "Since I can't get rich now, I'll at least enjoy it." But this thought is a trap. It's like saying, "Since I can't cross the river today, I'll camp forever on its banks." And the problem is that every dollar you spend now is one less soldier in your financial army. Remember, in the beginning, you need all of them fighting with you. It's not about never going out, never partying, never buying anything. It's about priority. It's you looking at an expense and asking, does this bring me closer to my 100K or further away? Because when you understand the power of the first 100K, a new sneaker loses its charm. A more expensive car feels like dead weight, and spending $200 on a weekend is shooting yourself in the foot. Every choice counts. Tomorrow's millionaire is not the guy who earns the most. He's the guy who knows how to wait, who knows how to say no today so they can say yes to everything later. You can have freedom, peace, time, power of choice. But first, you need to make peace with the sacrifice. If you haven't reached your first 100K yet, you need to understand one thing. Every dollar that comes in now is worth more than it will be worth in the future. Why? Because he has more time to grow. When you invest early, time works in your favor. A single dollar invested at age 20 can be worth much more than $5 invested at age 40. That's why you hear so many people saying to cut out coffee, takeout, unnecessary spending. It's not because that $5 will make you rich. It's because they will teach you how to save, prioritize, and invest. And in the beginning, every little saving speeds up the process. A silly $50 expense today could be $200 you missed out on in a few years, because this money could be yielding, growing, multiplying. The secret is treat every dollar like a seed. In the beginning, you can't waste any. If you want to learn how to invest better and control your finances, this channel is for you. Subscribe now. Many people think that saving $100,000 is just a matter of investing well and letting the money grow. But the truth is that this is only part of the equation. What really makes the biggest difference in the beginning is how much you can save and save every month, year after year. For example, imagine you save $15,000 a year, which works out to about $1,250 a month. If you put that money into a conservative investment that yields 4.5% a year, a modest rate considering the market, in about 6 years, you'll have over $100,000. Now, the interesting thing is, of that $100,000, 85% will be the money you save directly, and only 15% will be the earnings from investments. This shows that the most important thing in the beginning is not making money in the market or making money work for you, but rather make the money go into the account and then invest. Disciplined savings and controlling your spending are the basis for growing your wealth. Furthermore, many people get stuck in the idea that they need to earn a lot of money to be able to save up this amount. But in reality, the secret lies in 2 points. Control what you spend, avoiding waste and unnecessary expenses. Increase your income over time, whether it's through extra work, a promotion, a side hustle, or investing in education to earn more. When you do this consistently, even if your investment returns are modest, your balance will grow. And this has a powerful mental effect. You begin to understand the value of money, develop discipline, and build financial habits that will stay with you for the rest of your life. The trick is not just luck or the ability to invest, but the ability to manage your money intelligently. So, if you want to reach your first $100,000 quickly, start by focusing on increasing your savings and controlling your budget. Learn to prioritize spending, avoid bad debt, and focus on building a solid savings account. Then, use the power of compound interest to multiply that amount. Now that you know that the beginning of the journey is the hardest, that every dollar counts, and that saving is the foundation, let's talk about the 3 main strategies that will accelerate your journey to $100,000. 1. Increase your offensive. Make more money. The first thing you need to do is focus on increasing your income. It's like in sports. To win the game, you need to be aggressive, create chances, and score goals. This could mean investing in yourself, taking courses to earn a certification, learning a new skill, taking on extra jobs or side hustles, or even switching jobs for a higher paying one. The more you can earn, the faster you will be able to save money and invest. 2. Play good defense. Control your spending. But earning more is no use if you don't know how to control where your money goes. That's the defense part. Many people think they need high salaries to become rich, but the truth is that many millionaires live on an average income, but they know how to save, plan, and avoid unnecessary expenses. Making a budget, cutting unnecessary expenses, planning your purchases, and avoiding impulse purchases are actions that strengthen your financial defense. Remember, it's not about living tight, but about knowing how to spend wisely to preserve and increase your wealth. 3. Maximize the efficiency of your dollars. Take Advantage of tax benefits and high interest rates. The third strategy is to make your money work more efficiently for you. In the US, this means using accounts that shelter your money from taxes, such as the Roth IRA, traditional IRA, and 401k. These accounts allow your investments to grow with tax advantages, or even earn you free money through your employer's 401k match. Plus, if your money is sitting in your checking account, you're missing out on earning opportunities. Put what you don't need to use right away into a high-yield savings account. Many pay more than 4% a year, which is a lot better than almost nothing. Summary: if you combine make more money, spend consciously, and invest intelligently, taking advantage of all possible advantages, you will be able to speed up the process and reach your first $100,000 much faster. If you want to accelerate your journey to your first 100K, there's no way around it. Increasing your income is essential. Think of it this way: your income is the armor that protects you financially and the tool that allows you to save and invest more money. The higher your income, the faster you accumulate it. Here are some simple and practical ways to increase your income. Learn a new skill that pays well. For example, programming, digital marketing, sales, or other skills that are in demand in the US market. Take courses and certifications. Investing in yourself is one of the best ways to secure a raise or land a better job. Consider side hustles, extra work such as freelance work, deliveries, online consulting, or even selling something you create. Change jobs. Sometimes the best way to earn more is to move to a company that pays better or offers more opportunities for growth. But be careful, just earning more is not enough. You need to balance it with the other strategies we talked about, such as controlling expenses and investing wisely. If you do this, you will see that the money starts working for you faster and the so-called snowball effect happens. Don't waste time. Sign up now to transform your relationship with money and achieve financial freedom. Making more money is important, but if you don't know how to control your spending, it will feel like you're swimming against the tide. That's why playing good defense in your finances is just as crucial as increasing your income. Controlling your spending means understanding where your money is going, cutting unnecessary expenses, and avoiding those impulse purchases that, at the end of the month, can drain your budget. Many people don't even realize how much they spend on basic things, like eating out or buying coffee every day, and this can add up to thousands of dollars over the course of a year. To start, make a simple budget. Write down everything you earn and everything you spend. Then, see where you can cut back without suffering. For example, swap that expensive dinner for something simpler a few times a week, or avoid impulse purchases, like trendy clothes that you won't wear very often. The discipline of controlling expenses will ensure that the extra money you earn actually goes into your savings and investments, and does not disappear into bills or bad habits. Furthermore, having this financial defense means you are prepared for unforeseen events, avoiding debts that only delay your journey towards your first 100K. Here in the United States, the government takes a cut of what you earn in taxes, sometimes a large chunk, as much as 37% for high earners. This means that if you don't use strategies to reduce this tax cut, your money will grow more slowly. Therefore, using the calls tax-advantaged retirement accounts is essential to accelerate your wealth. The most common ones are Roth IRA, where money grows tax-free and you don't pay anything when you withdraw it in the future. Traditional IRA, where you get a tax deduction in the year you make the contribution, but pay tax when you withdraw. 401k, the plan offered by your employer, which sometimes even gives you a match. That is free money that helps a lot. Investing your money in these accounts makes it grow faster because you pay less tax, or none at all, depending on the type. This means the compound interest snowball grows bigger and faster. Another tip is to not leave your money sitting in your checking account where the yield is practically zero. Choose a high-yield savings account which offers interest of 4% or 5% per year. much better than the average of traditional banks. This way, you ensure that even the money you have saved for emergencies is growing and helping you towards your $100,000 goal. Many people think that the secret to getting rich is just to invest and wait for the money to grow on its own. But the truth is that in the beginning, most of your wealth will come from a disciplined economy. That is, how much you can save out of your own pocket. Let's simplify. If you save $15,000 per year for 6 years, with an average return of 4.5% per year, you will reach a little over $100,000. But of this amount, about 85% is the money you saved directly, and only 15% is the interest that the money earned. Even if you manage to save much more, like $110K a year, and invest it at a high 10% return, most of the money still comes from your savings. In other words, the most important point here is that you need to focus on spending less and earn more, because interest will only really help after you have accumulated a good amount. Without savings, no investment will work magic. Final summary: how to accelerate your journey to your first 100K. To quickly reach your first 100K, combine these essential actions. Increase your income, invest in learning valuable skills, do extra work, and seek promotions or better jobs. Control your expenses. Know exactly where your money is going. Cut unnecessary expenses and avoid impulse purchases. Invest smartly. Use accounts like Roth IRA, traditional IRA, and 401K to pay less taxes and accelerate the growth of your money. Saving is essential. Remember that in the beginning, most of your wealth comes from how much you save, not just from interest. Make your money work for you. Put your money in high-yield accounts and take advantage of the power of compound interest. If you do this, you'll get past the hardest part of building wealth, the first $100,000, and you'll be able to watch your wealth explode from there, creating a snowball effect that will accelerate your financial independence. Here, you will learn everything about money and investments in a simple way. So, sign up and stay informed. Thank you.